Welcome, ladies and gentlemen, to the special presentation for Friday, June 10th. My name is Dan Misch, and I will present this week on the topic of minimize risk, maximize reward. And what we're going to do is try to protect some of our hard-earned, unrealized gains. And also this week, I have some very exciting news regarding a new way for you to learn what VectorVest means when we say worry-free investing. So please stay with me until the end of this video. So let's begin tonight by what started us on this worry-free investing path, and it's this long-term backtest which we've shown in a few Strategy of the Week presentations. Over the past 20 years, this backtest has an annual rate of return of nearly 26%. And it has a pretty simple trading plan. When VectorVest issues a confirmed up, we buy good high-quality stocks and we hold them until they turn into a sell-rated stock. So overall with this test, we know the trading plan has some viability, but what we want to do is look at it in the most recent uptrend. And for that, we'll move into the Unisearch tab. And the name of the search for that test is Long-Term Winners RS Descending. And essentially what it's doing is taking the entire VectorVest database and sorting it by its relative safety. And as mentioned, that test uses confirmed ups as its buying signal. The last one that was issued was back on March the 1st. So if we take a look at the stocks from that time frame and we will do a quick test of the top 10, you'll see we have 6 winning trades and 4 losing. With our 6 winning trades all showing total annual rates of return of 9 to 86%. Now of course our biggest winner in there is NetEase, simple NTES. It was trading at 138.77 on the confirmed up and closed yesterday at 171.48. If we take a look at NTES from the confirmed up, again all the way through yesterday's date of June the 9th, the graph shows the nice upward pattern. And you can see at one point the stock had actually pulled out of its upper envelope as we're looking at this in the DEW layout. The lowest price it hit was back on April 25th when it was down at 130.82, about 6% from your original purchase price. And if you were the best trader in the world, you may have got out at the high point of 179.10. So it stands to reason, with the stock normalizing back in between its envelopes and the DPO shown down on the bottom trending down, it's a good time to think about protecting some of those unrealized gains. So we could take our profits entirely and close the position. We could take 50% of our profits and let the rest run. Or we can set a way to protect them while still holding on to the position. So let's break down where we stand and see how much protection to buy and how much more upside we could realistically expect. So we bought 100 shares of NTES on March the 1st because we were in a confirmed up and it was in the top 10 stocks of that long-term winners search. We paid $138.77, giving us a cost basis of $13,877. With the stock closing at 171.48 yesterday, that means we have a value in that trade of $17,148 minus the cost basis gives us $3,271 in unrealized gains. So again, it stands to reason we want to keep as much of that as possible. So we will go out and price a collar trade on NTES, which gives us a predetermined maximum loss and a predetermined maximum profit. And if the price is right for that collar, we will not have any worry about ensuring a profitable trade. And to do that, we will buy a put out of the money below where the stock is trading and sell a call out of the money above where the stock is trading. I've moved us into the Options Pro program, which there is a trial link for in tonight's VectorVest views, and we're going to begin by looking at the option chain. Now we are looking at this as of the close of business on Thursday the 9th. Right up at the top you can see that last price of NTES. Our calls are listed on the left, the puts are listed on the right, and our strike prices are right down the middle. And we are only looking at the July expiration, so you can see we have 37 days until this collar would expire. So if we begin over here on the right hand side buying the puts, we can buy the 170 put, which is out of the money, and you can see we have a bid-ask spread of 620 to 650. So we can realistically expect to pay $6.35, the midpoint, for that put. If we move over to the call side and we sell a call out of the money, we could sell the 175 with a bid ask of 530 to 560. We can expect to receive $5.45 for selling the covered call. So if we take those prices and put them into what's known as the risk graph here, right up at the top you can see our fill prices again at the midpoint, and that means for one contract each, protecting that 100 shares, it will only cost us $90 out of pocket for this trade. By buying that $170 strike protective put, we've given ourselves the right to sell our shares of NTES at $170 a share. That would give us $17,000 in value from the trade on those 100 shares, and minus our original cost basis, that's a 22.5% profit. By selling the $175 strike call, we agree that we would have the stock taken away from us at that $175 price, giving us a value of $17,500. Minus the cost basis, that gives us nearly a 26% gain in that same 3-month time frame. Here are both sides of that trade shown on a profit and loss diagram, and you can see there's really no bad outcomes here. If the stock continues to go down, we don't need to worry. And certainly if it goes up, we don't need to worry because our gains are terrific. And if the stock does not move to either of those levels by expiration, we are still worry-free because we own the stock and we did not need the insurance policy, which cost us that low $90 premium. It's trading systems like this that form the basis for income generation through capital appreciation, dividend collection, and selling options. And once you get yourself firmly in the cycle of doing all three of these, regardless of market volatility or direction, you have truly changed your retirement paradigm. Our worry-free investing is heavily focused on taking profits and generating consistent income for our retirement-minded subscribers. And those are all part of the VectorVest Retirement Services Worry-Free Investing Seminar. Now we have received some great feedback and compliments from attendees of our already held 2016 live events, and we are excited to offer this 2-day all-inclusive seminar to all of you online on Wednesday, June 22nd and Wednesday, June the 29th. A few weeks back, we asked for input from you as to what you would want to see in this course, and we have shaped the material and content per your suggestions. If you go to VectorVest.com and look at our live events page, you will see the seminar listed. We do have a full description of the offerings and a full agenda included for the 2 days. And you will also find a registration link which is offering a special early bird price of only $395 for all of it when you register by June the 15th. If you have any questions about getting yourself registered for worry-free investing, please call the phone number on your screen. Thank you for joining us this week, and we look forward to working with you later this month.